George Habash, welcome back to F.A.C.E. How are you, buddy? Waiting for you to.
Okay, I'm here. I'm here with you.
You are,
Good
hey,
morning.
George. Long
How are you,
time.
George?
How have you been? I know you went through some stuff that makes trading a cakewalk. So some physical things. How you feeling, buddy?
I'm doing pretty good. Thank you for asking. And actually, I was gonna say, very good analysis on the market, and I share with all of you a lot of the concerns that you guys have over, the state of the market and the volatility, and especially Nasdaq, because Nasdaq is one of those instruments that I trade on a daily basis, and it's definitely going through some stuff. But on a personal basis, I'm not shaving my beard till my
All right,
next birthday, which is
all
gonna
right,
be
all right. Well, then
September.
all right. We let guests do what they want to do. So you have the freedom, and I remember. The last time we were going to get together and something happened, you were going to address what it was like and how you handled trading during drawdowns. Are you sticking
Absolutely.
with that, or were you going
No,
to? What a
absolutely.
memory, huh?
Absolutely. And I tell you one thing, when we initially talked about a good topic to discuss for today, in my head, I was like, okay, we need a genuine topic that people actually can benefit from. And I was like, okay, when you said, let's talk about drawdown, I was like, man, that's not a sexy topic,
Yeah,
but at the same time, it is such a critical aspect of, trading success, and it gives you longevity in your trading career. And the way I handle a drawdown, and we all go through that. Nobody is perfect. We're all human. It's part of
yeah,
trading and part of the business, and you develop a process to help manage it. And three aspects to that I concentrate on whenever I'm going through a drawdown. One of them is emotional balance. The second one is account risk control, and also trade sizing. So those
okay,
three elements are the cornerstone of managing yourself as you go through a drawdown, because ultimately, what is the purpose here? My purpose is to keep that drawdown small, and the longevity of it very short. Correct?
yes,
That's what the purpose. So this way you could go back to having fun making profitable trades and increasing the size of your account and growing through this business. But like we said,
how would you define? I think different people will have different views on what a drawdown is. Um,
absolutely,
So I
absolutely.
mean, for you, George, when do you acknowledge, hey, you know what, I'm in a drawdown here?
A drawdown, I mean, you said it perfectly. I mean, some people have a lot more risk tolerance than others, and that it goes into the definition of what you consider personally to be a drawdown. 10-15% is a drawdown. If you go anything, more than that, that could actually affect the longevity of your trading career. If you go 50%, for example,
Yeah.
that can be mathematically a harder one to kind of overcome.
Yes.
So 10-15%, 20%, that's manageable. And the process that I go through, like we could discuss some of the elements. For example, let's assume you go through at 15% drawdown. That's normal. In what should be my uh, quick reaction to that situation? What should I start doing immediately to help me put the brakes on and say, okay, well, for whatever reason, the system, my methodology is taking in a little bit of water. How do I get back on the winning streak? Uh, uh, I start looking at trade sizing. So if I'm trading 5 contracts or 10 contracts trading the NASDAQ 100, and that is ultimately what I trade on a daily basis, then I reduce that size from 5 and 10 to 1 contract. So people who are trading stocks or trading Forex, they can mimic that by going down to 1 unit of that instrument.
Okay.
And the purpose of that is an emotional reason. Most
To
people would.
rebuild your confidence without creating more damage.
My confidence should never be shaken by something that I would consider normal thing in the market,
Okay.
and my confidence in my system should, and trust in my own ability to trade, should not be shaken by the fact that I took a drawdown when a drawdown is part of doing business.
You know,
So
George, it reminds me of a story when I was a young guy and I moved from Chicago to LA because they had a branch office there. And I go, well, I've always wanted to move to California from Chicago. And my manager said this, that, about trading and other things. If you drive a taxi cab, you can't expect not to get tickets.
here you go.
you know so I mean, taking a hit here and there is just part of driving a taxi cab.
Absolutely. And I expect it. Like in my day and in my mental preparation, I'm expecting to actually get stopped out along the way throughout my trading session. And if it doesn't happen, I'm literally like confused. Like what just happened here? And that prepares me to not go into a fight or flight emotional reactions to trading.
Okay.
And reducing your size is actually serving that purpose, is to get you not to fight and not to flight, but to continue to trade, but at just a scaled down uh, 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 scale. So this way you could turn the corner, but turn the corner smoothly without digging yourself a deeper hole. Typically,
Yeah,
what happened
yeah, people will increase leverage to try and get it back. The
because they're
exact
thinking
wrong thing to do.
because they're thinking about money and
Right.
not thinking
Exactly.
about process.
Yeah.
And to get out of a trading drawdown, it's a function of process. You could be simply not connecting with the market on an emotional level, or your system is not generating, a profitable trade. But to increase your size in a time when you're not connecting is actually exactly the opposite behavior that you need to exhibit. So
Okay.
by reducing your size, you prevent your fight and flight behavior, and you're focusing on profitable system trades, and you're not thinking about the money. And the only thing you're looking for is to put on good quality decisions. And you're also reducing your frequency of trading. So if you're averaging 5 decisions a day, if you're active Nasdaq trader, or however you trade, then take that by 75% and go to 25% of the frequency, and be extremely selective, and be extremely selective and looking for the highest quality decisions that you could come. Also, take a break. I mean, take that Friday off. Look at your days and see when you are effective. Like for
Great
example,
one.
for me, uh, Tuesday, Wednesday, Thursday is my most profitable days. Well,
Mine
why?
too.
It's strange, but it works that way,
No,
because
yeah,
I
go
come I,
ahead.
co- I
You want
come.
an explanation?
Absolutely, go ahead.
All right. Well, how markets close Friday? And it's a lot of evening up Friday, and I tell people never try and make your week on Friday. I mean, maybe some people did when there's an NFP, but because you usually have follow through from last week on Friday, Monday. So the meat of the week is, especially for, changes in direction, is Tuesday, Wednesday, Thursday, because Monday's a follow through day and Friday's a book squaring day.
Absolutely, and that's well said. I didn't even think about it in those terms, but I look at
Yeah.
my statistics, and I just keep finding my losing days to be Friday, and
Yeah.
Monday is
That's
always like a
interesting.
50-50,
Yeah.
and I'm like,
Yeah.
okay, so why is that? And your explanation makes perfect sense.
Okay.
So guess what? If that's not when you're effective, and maybe different people are different, but take the Friday off and have an extended weekend and just refresh and regenerate yourself. So this way, when you make decisions the next week, you have more energy and more focus, and you're more effective and more connecting. Another thing that I also do um, when I'm trying to get back in connected with the market and more effective is I do what we call in the room shadow trading. So before I make a decision that is with real money, I mentally communicate through the room. Hey, listen, I'm gonna buy here, sell here. This is my stop, and this is my target. And I do 5 decisions like that. And if I am 3 decisions correct and 2 decisions that are expense trades, that means I qualified myself to actually go on to the next stage of the trading process, which is trading live. So if I am three expense and 2 profitable, then I need to do this again and again and again. So what that does is it measures your connectivity to the market, and it measures uh, uh, your decision making process, and if you're in harmony with the market or not. And if you're not, there's no sense in actually putting a live trade till you are in sync. So that
Okay.
saved me a
I've
lot
never
of
heard
money.
that before. That's an interesting exercise.
Yes, because a lot of traders, and I work with a lot of them, they just wake up and start trading, start
Yeah.
making decisions. But like a car, you need to turn on the engine and let it warm up.
Yeah.
And that's what that
Or
exercise does.
athletes before they're
Exactly.
in the race, they're stretching, they're getting ready. They're taking warm up swings, whatever the sport is. So yeah, interesting. What I've noticed for me, George, is I know going into the market by doing my work on the weekend what I am looking for and what I'm going to do. They're almost like planned out trades for the week on the weekend. Of course, you don't know how the markets are going to come in early in the week, but you have a plan. And then when I uh, most of those trades, they have a higher probability than when I come in and it wasn't planned on Saturday, and I go, yeah, you know what, this looks good, I'll give it a shot. So I know you don't plan trades because you're just going with the flow of the market. Um, but do you ever do that on the weekend? Kind of have a, you know, go over where you would be a buyer, where you'd be a seller, what the market may offer you next week, or is it just going with the flow during the day?
I made a decision time ago that my weekends are free from
Okay.
anything that is related to trading. So
Wow.
when Friday is done,
I'm
I
signing
literally
up.
I'm literally
I want to
signing
do what you do.
off. Like mentally, I check out. I
All right.
literally mentally check out. So Friday, Saturday, and Sunday, I'm really doing a lot of things that are either sports or activity, or whatever I love to do, workout, photography, things like that.
Okay.
And then Monday, like morning, I spend 5 minutes looking at the market. Then I start making decisions based on that, and that keeps me fresh
Okay.
because I'm not overwhelming my senses constantly with the market, because it sucks energy out of you. Uh, and we enjoy it, we love it, but also you have to manage yourself emotionally and make sure there's a balance between your trading life and the
And your
totality
love
of the
and your
totality
love
of
life.
love life. And it used to suffer a lot. Trading used to be my wife, by the way.
All right.
Yeah, so
Okay.
that's an important. So trade sizing, let's go back
Yeah.
and review, is
Okay.
very critical. Emotional balance on how you prepare in the morning and how you manage yourself emotionally throughout the day will have a very distinct impact on how you turn the corner when you draw down, and also how you manage your account. So if we go back to the idea, and I tell a lot of people in our trading room and the people that I work with, listen, there is a certain level of pain that will happen by you choosing to be a trader. It's gonna happen. Your senses are gonna get hit at some point. Nobody likes to take a drawdown or feel like they're not progressing, but you better accept the pain of discipline, or you will experience the pain of regret. And that's a
I like that.
statement that I tell people on a daily basis. So it's going to be painful either way, because to be disciplined, it requires a lot of focus and attention, and in some ways there's pain associated with it, but that's a lot more pleasant pain than the pain of regretting that you could have done something to save an account that went to zero, for example. So account risk control comes into that equation. If you're down 10-15%, I tell people, hey, listen, take 5%, additional 5% of risk capital, and divide that into 5 trades, so 1% per trade, and make decisions that are high quality. You're rested and you are focused and you've done them exactly by the book, and they are not oversized. They're simple. And now you made 5% out of that 5%. Then now it's time for you to start adding more size. So you double up your size and do another 5% like that. And that is the other side of you getting back into profitability. Only once you went through the step of sizing correctly, you made sure that you're emotionally balanced. Now it's time to turn the corner, and that's how we go about it. Is you take 5% of risk and work that to another 5%, and then just repeat that process till you're whole, and then back to equity high from there.
Okay. Do you find that people's expectations, George, of um, that you can't be lazy doing this? That really, if you have a good work ethic, you have an edge of ending up being a good trader because you're willing to put in the time. A lot of people, and that's why they gravitate towards following different people or joining signal services. They just want the money to drop into their account.
Yes, and I experience you experience people like that in any business, actually,
Yeah.
and in the trading business, because the barriers to entry is so you literally, you could 5 minutes, you could open an account, dump some money, and you are a trader.
Yeah.
And the expectation, especially in the age of cryptocurrency, and we know you could make 1,000% in a day, just buying the right thing, and you don't really have to be smart, you just have to be lucky. It gives people the wrong impression of what trading is, professionally trading. And trading professionally requires you to put on the majority of the work on yourself, believe it or not, on how to understand you in relation to the market versus to understand the market. Because in trading, you're projecting, and if that projection is not balanced, you tend to project your hopes and fears and not listen to the market. And actually trading, if you look deeply at it, it's a listening business where you are listening to the flow of the money, and not necessarily analytical where you are projecting what you think. And that is a distinction a lot of people don't pay attention to.
Yes. How can you get a market message by seeing how something is underperforming when it should be doing better if you don't listen? How can you hear any message unless you listen?
Absolutely. And the way you measure that skill is by making assumptions and see if the market is actually giving you the feedback that you think it should. Then
Okay.
then when you go through that process, you start seeing, okay, well, if my assumptions are telling me the market should bounce here and it's still not bouncing, what is am I then the message the market is giving me is not, I'm not listening to it. Okay, so listen to that part.
Okay.
And it's one of those things that the more you practice it, the more it becomes like a muscle memory for you. But back to the big picture here, those three elements are the cornerstone of turning the corner on a drawdown. Account risk control, trade sizing, emotional balance. Uh, each one of those, you as a trader have to invest time because you are unique in the way you understand and read the market. No two traders are the same. So uh, spend time on you, journal, figure out the times in which you are profitable versus not, look at the different signals that work for you versus not, and make sure that you are emotionally balanced along the way as you go. And again, back to that point, invest in being disciplined, even if it requires a lot of effort, because the other coin is the regret part, and that is nobody. We all experienced that, by the way. I definitely did.
Yeah.
And I learned from those experiences. Hey, listen, if I only did put a stop here, I
Yeah.
would have saved my account. Well,
Yeah.
how many times do I need to learn that lesson if I want to be a professional trader? I only needed to know it once. That's it.
Yeah. That's
Yeah.
good. You learned really quickly that getting hit in the head with a hammer hurts.
Yep. It does. It does.
I took, they had to take a few swipes at me. Let me ask you about the smaller rectangle you have in there, the NASDAQ. Is that a long entry that you had at 1324 and your stop is underneath it with the red dotted line and your target price is back at the high?
Okay. So I'm trying to see what you're looking at.
NASDAQ daily.
Yeah. Yes. The daily. Okay. So let's look at the daily here. Okay, so right here, that's the okay. So target number one, basically, what you're looking at is the market made a shift in momentum here and hit target number one, which is 1400. So all the system that you're seeing here is auto generated, and it tells us entries, exits, and stops on the bigger picture, and
Okay.
the same system is actually mimicked on the shorter time frames. I mean, overall, when I look at this, what is the market telling me? The market telling me that it's going through a very deep rotation lower, which to be expected from all the
Yeah.
long. I mean, look how far we came from
Yeah.
8,000.
Yeah. It's Mount Everest.
Exactly. So people are hiking down a little bit right here,
Okay.
and the thing about which I share from hearing the rest of the people in the conversation, they were talking about, okay, this market is due for this correction. We expected this correction to happen. It's happening. Is also on the flip side of that. What I'm paying attention to is this, at least on a short term basis, right here, is the extension phase of this market. We have between yesterday and into today, we went from target number one all the way to target number five, which is below 161. Typically, almost 90% of all counter trends happen in this spot right here, where the market will make a low and make another higher low, then price stability will ensue, then counter trends will start to shoot up into 250 and 300. So I am conscious of that, and I'm going to be looking for these rallies as an opportunity to kind of get short in the market again. But I wouldn't necessarily be looking at this as, hey, I need to get short right here. Why?
Yeah.
Because the market is very vulnerable for counter trends whenever you go past target 4 and 5. And that system that we have is critical. Another thing that I want to share with people is always pay attention to the FOMC meeting numbers. So that 1 second before the FOMC announces whatever their policy is, mark that price and keep it on your chart. You will find out that the price react to that number significantly on a daily basis and intraday basis.
Okay.
So that is a tool that we use in the room on a daily basis, and I mark every FOMC meeting, and every time we come to it or come back to it, we see the market react in a meaningful way that we can take advantage of and position ourselves for.
Nice, George. I'm getting some comments. Susan Taylor said, found this interview very useful. Thank you, George. And so now it's a segue for you to show people that agree with Susan how to reach you.
Yeah,
And
absolutely. And thank you for asking, Susan. A couple of things. If you have any questions about what we do and how we do it, you could reach us by this email. I'm going to put the link actually in the room here on Zoom.
got it.
So support a Harmony Trading System. We're offering everybody come and see what we do and how we do it as far as trading and risk control. And we give you a month of free access. Just come and see us. There's no credit card or anything like that. Just come and be our guest for a month and see the trades that we take on a daily basis. You want to call me and talk shop and trading? Well, guess what? Here's my phone number. As long as you promise not to call me at 2:00 in the morning, we're good. But that's my phone number, and
Oh,
feel
just turn off your phone at night when you
hey,
go to bed.
maybe
Sorry, I only call people at 4:00 in the morning. Yeah, 4 a.m. in the morning.
Steve, Steve likes to win. Steve will be your daily alarm clock now.
Oh boy. Well,
Anyway,
Steve, looking forward to hearing from you. And that's our website, harmonytrading.com. I took the website down a couple of days ago because we're doing maintenance and upgrade, but that should be back up hopefully soon within a few days.
okay.
But those are my contact information. I truly enjoyed being with you guys today. And Dale, you're always a gentleman, and love talking to you. And you guys have a profitable day and a blessed day.
You too. Thank you.
Thank you, George.
All right. We'll see you guys
All
soon.
right. Remember, everyone, don't just count your rankle bars. That's right, Monica. Count your blessings and continue to be informed on the morning edge in 15 minutes. And we'll see everyone tomorrow. Good hunting the rest of the day. Well, 4 a.m. is when Rocky Balboa got up to start training to fight Apollo Creed. So Rocky Balboa and Dale Pinkert, the coach, get up at 4 in the morning. All right. Anyway, so
right.
that's a wrap, everyone. Thank you very much, George, and
Thank you.
we'll see everyone tomorrow.
All right.
And don't forget the guys in the morning edge. Adios, everyone. Thank you, Steve Volge.
Bye bye, Dale.
All
Bye-bye.
right. That's a wrap. Adios.